Hey everyone, welcome back to the channel, your number one source for income-oriented investing. I just wanted to make a super quick video for you this Saturday, unedited, because I'm still in shock about this. So like the title says, there are two covered call ETFs that are not only blowing away their competition, but they're actually beating the actual index funds, the growth funds. So about 7 months ago, guys, I came out with this video called The Honest Truth about covered call ETFs. Over 35,000 views on it, so obviously a popular video. And the whole premise behind this video is like you could see on the screen. I basically say that a covered call ETF has a 100% chance that they will underperform their underlying over the long term. So if you have the S&P 500 growth ETF like an IVV, a VOO in the US, or a VFV in Canada, they'll never, a covered call S&P 500 or a covered call NASDAQ 100 will never beat a growth index fund. Well, it turns out that I'm wrong, because there are two covered call ETFs listed on the US stock market that don't use leverage, that have a higher fee than, of course, growth funds, that are actually outperforming not only their competition, but the index funds themselves. So, of course, I'm talking about QDTE and XDTE from Roundhill. So QDTE is the NASDAQ 100 covered call ETF. XDTE is the S&P 500 covered call ETF. Both of these have a 95 basis point MER. Both of these use a daily covered call option strategy, zero time to expiry strategy. So it's a daily covered call strategy, a daily option. And another thing that's really unique versus the competition is that they have weekly dividends, weekly distributions, weekly payouts instead of monthly payouts. So just so you believe what I'm talking about here, I have a few tools which will show the comparison here. So if we do, and by the way, I'm filming this on September 6th, so the total return dates are going to be from the beginning of QDTE, which came out in the first week of March of this year, to September 5th, basically. So if we just do, let's start with QDTE versus QQQ. So NASDAQ 100, this one here, the NASDAQ 100 covered call ETF versus QQQ, which is a classic NASDAQ 100 growth fund from Invesco. You could see that it is currently outperforming March 7th to September 5th. Of course, it's not going to count September 6th because the trading day is not over. So it's about roughly 6 months of data. Total return, QDTE is outperforming QQQ, 4.92% return versus 3.8% return. And it's not like the market has been really, really bad in this time frame, because obviously QDTE is, or a covered call ETF in general, is expected to beat the index during a period where the market is flat or down. But you could see that, within the 6 month time frame, most of the market, I would say the majority is on an upswing, or the NASDAQ has been in an upswing. You could actually see in this period of time, the blue, or QQQ, during a prolonged period of bull run here, QQQ is outperforming QDTE. But with a little bit of volatility now, it's going, the NASDAQ is having more volatility today. But since inception of QDTE, it's beating QQQ. Not only that, it's also beating all its competition, right? So there's plenty of NASDAQ 100 covered call ETFs on the US market. You have, so I just did a comparison, which the ones I feel are the top ones, or that have the highest performance. GPIC from Goldman Sachs, your basic one, which is, by the way, outperforming JEBQ. That's why I did that one. You got another daily one from ProShares, IQQQ, very similar strategy with a lot lower management fee as well, 55 basis points instead of 95 basis points. There's QQQI from NEOS, there's QQQT. I compared them to all of them, guys, and QDTE is beating all of them. I also use the Vanguard compare tool, where you could compare up to 5 ETFs. So unfortunately, QDTE, we could only see the 3 month performance, because we can't see the year to date, because it came out in March, so we don't have year to date. But you could see clearly QDTE is not only beating its competitors, which the competition is actually very close to each other, but not QDTE. But it's also beating QQQ. It's the only one that's beating QQQ. The competition is not. Same exact story for XDTE, the S&P 500 one, guys. If you do XDTE versus IVV, which is like SPY or VOO, again, XDTE, the covered call one, is beating IVV. Again, remember, disclaimer, it's only six months of data. Doesn't mean it's going to beat it in the future, right? The same thing again, if we do XDTE versus its competition in terms of covered calls, like GPIX from Goldman, iSpy from ProShares, SPY-T from Defiance, SPY-I from Neos. You see that the covered call ones are all very similar in terms of performance. They're in the sixes. iSpy is the second best one, performing one. It would be IQQQ's S&P 500 brother or sister. But same type of story. XDTE is not only beating all of them, but also the S&P 500 itself, which this is the SPX. It's not even IVV. IVV is 7.38% because there's a little bit of a fee in there. So very, very impressive. And I kind of like going back on my words of what I said. So it turns out, I guess maybe it is possible for a covered call ETF without leverage. I mean, that's what's even more impressive. These things don't even use leverage, guys. You know, there's some in Canada like HYLD. It's beating VSP. You know, QQCL I don't think it's beating an XQQ or a ZNQ from BMO, but they're very, very close. But these ones are clearly outperforming without leverage. So the $1 million question is why. Actually, before you delve into that, I just want to cover the fact that some people have been messaging say, hey, look, XDTE is better than QDTE. XDTE is outperforming QDTE. And that's actually true if you do QDTE versus XDTE. XDTE, the S&P 500 one, is outperforming, but that's not really a mystery. That's not rocket science, because in this time frame, the S&P 500 is actually beating the NASDAQ 100. If you do QQQ versus IVV during the time frame that Roundhill they launch his ETF, so March 7th to September 6th, so September 5th, QQQ is actually underperforming IVV. IVV, or the S&P 500, is beating the NASDAQ 100. So that it's not rocket science. Of course, if that's the case, remember, you're always investing. The most important thing is the underlying. So of course, that's why XDTE is beating QDTE recently, or as of now. I think that if the NAT or QQQ starts outperforming IVV eventually, or over time, QDTE will take the advantage. So just depends on the underlying, what it's doing again. So that's not really rocket science. What's hard to figure out, and the $1 million question, is how are QDTE and XDTE not only beating the growth index funds, but just blowing away all their competition as well? So in my mind, the only logical explanation I had, or the only thing that's really different, is the weekly distributions. Are the weekly distributions causing some sort of better compounding effect? You're buying more shares more often, so your dollar cost averaging more often. Because remember, these total returns, right? It's with the dividends being reinvested, right? So I convinced that maybe it's a small factor. Could it be because it's a daily strategy? Well, we can't really say that, because there's other daily strategies like IQQQ that are managed with a lower fee, managed by ProShares, that they're not beating the indexes as well, right? So IQQQ is not beating QQQ, and iSpy, although it's the second best in terms of the covered call one, 675 in the last 3 months, is not beating the S&P 500. It's close, but it's not there. So it's not the daily strategy, because other dailies are not beating it. So what is it? So I actually went on a live stream last night, guys, and I'll put the link in the video description below. Here it is, chatting with Adriano from Passive Income Investing. And this guy, Blake Downer EIT, he's more of a technical, he's more of an options geek. I'm not an options geek. I don't really do a lot of technical stuff and dig deep on the trades and stuff. And for the first 15-20 minutes of this conversation, we try to figure out, or he's telling me really the difference of what the strategy is of QDTE and XDTE versus the competition. So in his theory is that the weekly dividends have nothing to do with it. Whether it's weekly or monthly, it has nothing to do with it. It's really about the strategy. And these guys, apparently Roundhill, they're selling their daily call at market open or right after the market open. So I guess they're making a decision on the outcome of the market at the beginning rather than, for example, writing the call the night before, the day before. So also they're fully capturing what's happening overnight. So that's another thing, right? Because if you write your daily call at market open and it closes at market close, you're exposed to what happens overnight. So let's say overnight there's some good news and the Nasdaq or the S&P go up after trading hours, well, they will capture it, whereas some of the other funds will not. I guess that's another factor. But either way, his opinion is more the active management, that it's a simple approach. He used the analogy, these guys are playing checkers where everyone else is playing chess. So it's hard to figure out why, but all I could tell you is that I'm very, very impressed that a unleveraged covered call ETF with a fairly high fee of 95 basis points is not only beating all its competition, but also QQQ, the corresponding index fund. So I just wanted to show you. I found that it's very exciting. It's pretty cool. And I guess I was wrong when I said they'll never beat the underlying. But again, it's only 6 months. Obviously, we don't know what the future will hold. And as you know, I made a video entitled I'm going all in QDTE in my retirement account. So you could check out that video. And if you're interested to know what we actually discussed for 15-20 minutes, and after that we just start discussing everything. It's almost an hour and a half live stream. You could check it out. I'll put the link in the video description below. So hopefully you like this video, just a little bit of good news or some shocking news for your weekend. And take care, guys. See you next time. And let me know your thoughts, your comments, your opinions. Or if you're an options geek, what is your opinion on, or your thesis on why these ETFs are doing so well? Why are they blowing not only the competition, but the index funds, which is even more surprising? Let me know in the comment section below. And of course, I'll try to get, as well as my fellow American YouTubers, income YouTubers, which are getting more and more of. Luckily, Roundhill is a smaller firm, so we're gonna have access to the CEO. So hopefully I'll have him on again. We'll try to figure it out and we'll get the information. But either way, very, very impressed / shocked in a good way, I guess. So yeah, anyone who says covered call ETFs are no good, well, maybe you should rethink that statement. Have a good weekend, everyone. See you next time.